Hi, I'm Donnie Buchanan from entrycounts.com, the place where we make it all count, all of it. So in this video, this is for you if we have installed a GPFR and Xero system for you. And this is the updated video. We've done a couple over the years, but our system as of February 2024 is vastly improved. Number one, thanks to our experience, but number two, thanks to some really good releases that Xero made. And so this video is an update on how to use that system. In this example here, we have a company, a construction company with a couple of directors, and we're going to prepare annual reports so they can be lodged with ASIC because it's a large proprietary limited company. Okay, so first step is to have a couple of Xero tabs open. We always at least want 2 tabs open, but the second one, I want you to go to our new website. So this is our new website. I want you to go to the knowledge base and you'll find your way to the knowledge base. Here's the knowledge base here. What's important is we come down here into systems, checklists and templates. Within here, you're going to find a GPFR preparation checklist. Now, just a bit of a disclaimer, this checklist is solely for how to use our systems. It is not going to train you on how to prepare general purpose reports and make judgments and actually be an accountant. It's actually just to show you how the system works, where to put the information, how to use a certain report, and so on. Okay, so as you'll see, you work down. Step 1 is making sure the entity's set up properly. Step 2 is preparing the accounts. There's a few tips and tricks around what's best. And then step 3 is the final stages of the report. Okay, all right, so back here, first step on the checklist is to bring up your report. Two directors. Okay, so the second tab, the reason I wanted the second tab is for advanced and report fields. Just expand that out and I'll sort it alphabetically. Okay, so how it works is the report fields are kind of like placeholders. They're going to fill in certain information. Okay, I'm not going to go through every single field. What I will show you though is that you always leave the dividends paid and the operating profit. You always leave those ones till the very, very end. The reason you leave them to the end is because they are not connected to any formula in the general ledger. You have to put those amounts in manually. Xero does not have the smarts to allow those to pre-populate. So everything else can go in, all the addresses, all the directors' names, all the appointment dates, and so on. So that was step 1. Step 2 is I might duplicate the tab again, and we're going to look at report codes. So if you don't know what report codes are, what they are is you use them to tell Xero where to put that account. For example, if there's a goodwill account, you will click on it and tell Xero that you want this to go into goodwill. There's goodwill. So that's what report codes are. The next step is you start going through all the different reports. Now I'm going to skip the auditor reports. We'll go straight to the statement of profit and loss. Now this is laid out as per accounting standards. Do not hit edit layout. Do not hit edit layout. Okay, leave everything as it is. Okay, next report, statement of financial position. Do not hit edit layout. Do not hit edit layout. Do not drag and drop stuff. It is all laid out as per accounting standards. Statement of changes in equity. Okay, so this report, there's a perception in the marketplace that Xero does not have this report, and as you can see, that perception is incorrect. Okay, now with this report, some auditors will accept this report in this format because it provides all the relevant information. You, however, may be dealing with an auditor that believes it needs to be in a different format, and the format probably looks like this. Click Add Report, type in Custom, you'll have an extra reports template, statement of changes in equity. What you'll notice about this report is that it's empty. Reason being is what we have here is columns of categories. Xero currently does not allow columns of categories. It only allows columns of dates and columns of tracking. Columns of issued capital or retained earnings is impossible for us to build you. Therefore, this report is manual. Okay, so you actually have to type it in, and so on and so on. It's the type of thing you do only if your auditor asks for it. Next report on the list is the statement of cash flows. Okay, so with the statement of cash flows, this may be sufficient. This one you see in front of you may be sufficient. If it's not, you do have a couple of other options. Now, the reason this may not be working properly, there's a number of reasons. Firstly, the client that's using Xero may not be doing it properly. The second reason is when you use manual journals, you need to make sure that this is unticked for certain journals such as depreciation or amortization or income tax appropriation, etc., etc. Anything non-cash, you need to untick it. If the cash flow statement is still an issue, we do have the custom version as well. As you can see, once again, this requires manual inputs. My recommendation is do this last. This is one of the very, very last jobs that you're doing and getting ready for audit. Do cash flow last. Next report is the notes. Now, we've divided the notes into two separate pages. There's a reason for that. One of them contains text, as in the basis of preparation and accounting policies and some other required information. There is not much to do on this page. The only thing you need to do currently is to look at your fixed assets and determine whether or not you're going to either A, insert the depreciation schedule to show all the different effective lives in the groups and the rates, or under report fields up here, you will enter those rates here. That's the only choice you're going to make at this point. The rest of this report you will come back to later. Okay, so the majority of the work for you is actually on the final notes page. So how this works is that everything is presented account by account. This is the point where you can review the mapping to make sure the account's in the right spot, change it if it's not, and then make sure all the balances match back. For example, if we go down the page here and we look at revenue, we can see that all the main construction revenue accounts are in the main revenue section. Come down to cost of sales, we can possibly say that skilled labour hire should be remapped into direct costs. So that's a bit of an issue. So we go over here to report codes. So we come over to report codes, and under S for skilled labour, yes, it shouldn't be opening WIP, it should be cost of goods sold. Back to the report, just hit update, and you can see now we have mapped correctly. Okay, so your job is to basically go down and look at all the blue rows and say, well, is that in the correct group? Yes or no? So you go through all the different accounts and you will determine whether or not it's in the correct group. Once again, we've got placeholders for key management personnel and auditors. We'll come back to the income tax reconciliation last. Once that's complete, you go back to the very start, to the director's report. So if you come back to the checklist, you'll see that we are out now onto step 3, and we're going to start preparation. So now we're back to the stage where we want to get the draft accounts out to someone to review. First thing we do is we come down here and we determine whether or not something should be presented. Now what you'll find in the new system is that we've got these two, sometimes we have the exact same text blocks. The reason is because we allow you to hide the one that is not required. For this entity, there are no significant changes, so we're going to hide that. If there were significant changes, we would add them back under report fields. We can see that there were dividends paid, so we will hide this. There were no matters subsequent to the end of the financial year, so we will hide that. Now these accounts are going to be audited, so we will leave this in. We will not hide that. And depending on the type of report, sometimes the meeting of directors is required and sometimes it's not. That will be up to you. So now the director's report is complete. So back here on the notes page, it's the exact same process. We're going to go down, we're going to hide everything that we don't need. And it's easy to tell. You leave the tax and you hide the empty schedules and the empty text blocks. Now you might be wondering why this is the process. Reason being is it's much easier for you to hide these than it is for you to insert them. Much easier, much less risk. Once you've hidden all the empty sections, you come over and you hide the accounting policies. So it depends on the entity and what you've done in the accounting, but for example, we don't have any contract cost assets, so we're going to hide them. We don't have any right of use assets, we don't have any borrowing costs, and so on. We just hide, and hide. If you come back to the checklist, you will find that there is just 2 more jobs left. Those jobs is to add in the tax reconciliation and then to check any balance sheet switch rules. So let's go to the balance sheet first. What you can find sometimes, depending on what's happening, is that if there's a switch rule, you may end up with a hash. Okay, so how to address the hash? And it generally happens on related party loans and maybe tax. So you may find that you will have to edit layout just to connect the switch rule to the note. In this case, click there and you come over to related parties. Now it's linking to 21. Related parties is linking to 21. Now our balance sheet is checked, and the final task is to add in all tax adjustments that determined the income tax journal. What you'll need is you will need this here, net profit before income tax is 100,000. Go back to the notes. Depending on your auditor, it depends how much information they want, but you're going to put in 100,000 and you need to work towards the income tax journal. Now we only have a journal for current income tax, so there's no deferred, so we're going to put in 25,000. Now in this case, if there was any adjustments to be made to reach taxable income, you will make them here and it will update your taxable income. So the final part is we want to collapse these two so they don't show those details. So we'll come here to edit layout, scroll down the page. I'm going to collapse that, and I'm going to collapse that. And we're done. And the final stage is to hit publish. And this is where you determine whether or not you want to keep the audit reports in, whether or not they are required by the auditor. Let's keep those in and publish. If you head back to our knowledge base, you will see in our example reports section you will see what it should look like. If I click here, and this is what your final report should look like. All the relevant disclosures, all the necessary information, the audit report, and that is how you use your GPFR in Xero system. Okay. If you have any further questions, please reach out via our website. We've got a live chat where our knowledge base is set up. We're going to have some chat bots in there eventually to answer your questions. But if you need to, just reach out to me, Donnie, DONNIE at entrycounts.com. Thank you.